everybody, and welcome to this special edition of the Fundamental Analysis webinar here with AvaTrade. We'll be focusing quite a bit on the U.S. election that's coming up and the impact that it might have on some different markets that are related to the different candidates, and maybe look at some traditional effects over the years and really over the decades following U.S. presidential elections. Kind of a year-long effect that has happened in the past in one way or another, depending on who wins and that sort of thing. So we'll take a look at some data on that. We also, which is no small news, have the non-farm payroll announcement tomorrow out of the U.S. It's many believe one of the largest economic announcements each month when the non-farm payroll jobs data comes out of the U.S. And it's typically the first Friday of each month, which is tomorrow. So we'll look at that, which also comes out with other data other than the jobs. We'll be looking at hourly earnings, unemployment rate, etc., that comes out at the same time tomorrow as the jobs data. So we've got quite a bit to talk about. I'm just starting a little bit slower than usual because I know we're probably going to have a larger crowd in today's session. But welcome to everybody. We'll get started in just a moment. As always, keep in mind that no one trade is guaranteed to profit. I think we all understand that. You want to manage risk in a way that makes sense for you. And we go over some ideas in that regard using the tools that are built into our web trader and also in our app. In the order window itself, it'll calculate your exposure for you to your stop loss, your potential profit, that sort of thing. So it makes risk management quite a bit easier when you don't have to do that stuff manually. But you want to manage the risk in a way that makes sense to you. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. And I see some of you responded that all's okay with the audio and the screen. So it looks like we're good to move forward. So from our main website, we can access our web trader through the login here in the upper right-hand corner. And also our app has the same functionalities that we'll see in the web trader. But before we do that and start looking maybe at some of the signals and some of the latest economic calendar announcements or the upcoming announcements, we'll spend some time to talk about some information that we put together here at AvaTrade regarding the upcoming election in the U.S., the presidential election, and to a lesser extent, but also important, eyes will be on the House of Representatives, who retain, whether the Republicans retain control of the House with enough seats to have a majority, and if so, how much of a majority. Or if the Democrats are able to steal back or take back control of the House with the majority. We'll see. And then it's also the Senate as well. It's a divided Congress right now with the Democrats controlling the Senate by a very slim majority, one more seat than the Republicans in the Senate, and it's the flip opposite in the House. The Republicans have a super slim majority in the House. And so if it's a House divided, sometimes markets like that because no one side can ram through too much extremism or change. But we'll see how it turns out. There's some indications that there's momentum on the Republican side with Donald Trump in the latest polls. And if, in fact, the Republicans take back the Senate, maintain the House, and win the presidency, this is where maybe you could see a stronger reaction than if it ends up divided. So that's something to keep an eye on. This presentation that we're about to look at is focused a bit more on the policies that the Trump and Harris sides have pretty much not in common. There's not much overlap in their policies, and what effect those policies might have, not just on the greater markets, but maybe on specific instruments, specific stocks, or instrument categories like energy, for example, or other areas, technology, that maybe one looks more opportunistic than the other depending on who wins, okay, based on their policies that they plan to enact. And a lot of times the House and the Senate, if they're able to take control, fall in line with those policies, okay, because they're running on the same policies in order to win those seats in Congress, in the House and the Senate, which are the two parts of the Congress. And so you have to look at those factors, not just who wins the presidency, but how did the House and Senate go as well. So keep that in mind. Now, the elections, in-person voting, the main election day is next Tuesday. But in the run-up, there's a lot of early voting in the U.S. now, a lot of mail-in absentee ballot voting. There's millions and millions in the different states who've already voted. We don't know. Those votes are not tallied and counted, and no results are released until the polls close on election day. So while a lot of votes are in, we don't know who's winning, who's leading as of yet. But there's some indications that there's a larger Republican turnout in early voting than in the past, and that there were a lot more registrations of new Republican voters compared to new Democrat side voters since the last election. So the advantage that Democrats had in terms of having more voters is slimmer. They still have larger number of voters, but it's a slimmer lead. There's also some numbers that show an advantage of number of Democrats who switch to be Republicans is much larger, by about 30,000 in different states, even within single states, compared to Republicans who switch to become Democrats. So the numbers are all leaning towards the Republican side, with Donald Trump having the momentum in number of voters, increased registrations, and a larger turnout compared to the prior election with early voting for the Republicans, although still smaller than the Democrat turnout, which is typically larger for early voting compared to the Republicans, who tend to like to vote in person with kind of a distrust of the mail-in system. Okay, so looking at some specifics about policies, and I believe this page was mailed out with a link to all of our clients, so it should be available to you. And if not, you can ask your account manager to help you find it. It's on our website, but I'll be darned if I found it just clicking and trying to come up with it. I had to use the link to bring up the page. So, and I don't know that it's actually accessible from our main web page. I think it's a special section that was created that'll probably be temporary. So what we're looking at here then is they've started in this description that we put together, describing the Trump policy, what he's standing on, what he's promising if he wins the election. Okay, what changes will come, what policies will be focused on in the U.S. as it could relate to the markets. Okay, and so these are two main pillars of the Trump agenda: deregulation and tax cuts. And by deregulation, that means taking restrictions and regulations off of businesses, largely the energy sector in particular, to allow them to expand, to hire, to produce more product, etc., with less cost and less hands being tied in trying to do it, and less restrictions in terms of where they're allowed to do business or where they're allowed to search in the case of the energy sector for natural gas and for oil with drilling and fracking and all of those things. So deregulation is viewed as pro-business. The tax cuts are focused on largely corporate tax cuts, business tax cuts, that then the idea is would lead to expansion of those companies with better profit margins because of lower taxes, be able to hire more workers, pay workers better wages, etc. And which then has a effect on the rest of the economy as people are working and earning better wages. And if you look back at Trump's first term, he did all of these things already. That's what he's running on, is the fact that he's had a term already for 4 years, and he did exactly that. He cut the corporate tax rate from, I think it was up above 30%, 30-something percent, and cut it to 21% in the US to make it more competitive. He also used tariffs, and he's talking about doing that again to encourage even foreign companies to come into the US and build factories in the US and hire American workers in the US to avoid the tariffs. So not that foreign companies couldn't sell their products, but they need to build them in the US. And he did that with tariffs on China and other countries in his first term. And there was a big boom in manufacturing jobs created within the US after that system was set up, with lower corporate taxes, tariffs for imports from certain countries, and benefits for companies that came back from overseas and brought their factories back into the United States, allowing them then to sell their products without the tariffs and with lower corporate tax than what it had been in the past. He also allowed companies to repatriate profits that the companies had earned to bring them back tax-free, as long as that money was used to then build more factories and hire more people. And he's talking about a lot of those same policies that worked during his first term, going back now almost 8 years, and through those 4 years up to the point of 4 years ago where those policies then were ended by the current administration. And so deregulating largely, the fracking industry has been hurt quite a bit in the US. The ability to expand, to test new areas, the same with the crude oil exploration and any new drilling in areas like Alaska, or offshore drilling, Gulf of Mexico, off the coast in the seas. These are areas that the regulation has really hurt domestic production, to where the US had become energy independent under the Trump administration, and no longer are energy independent. The US relies on imports now. And so these things, deregulation and tax cuts, are the number one things that Trump is running on, along with things that maybe are less directly related to the economy, like protecting the border. But if you think about millions of people coming into the country kind of unchecked, that connects to inflation, higher demand for products. It connects to people can't find job openings necessarily because there's more competition for jobs, and the government handing out more free benefits, which is driving up inflationary situation. So all of these things together, if you start to put together kind of the playbook, so to speak, for the Trump platform, are pro-business, pro-growth type of policies. And so you might be thinking, okay, so if Trump wins, the markets should go up. Okay, and we'll talk a little bit about whether that is the case or not in a few minutes. But in general, it's a pro-growth, pro-business stance and low tax stance that Trump is running on. And the idea is that then also would trickle down to the people who are working for those companies that got lower taxes, et cetera. And there was evidence of that in his first term as well, with the lowest unemployment rate for groups like African Americans and Hispanic Americans, the largest growth of wage percentage against inflation in those same groups as well, of most any president before him. And so those groups have moved towards voting more for the Republicans this time than they have in the past. For example, the black vote in the past in the US, African American vote was always traditionally 90, 95% even Democrat vote. And the Republicans were lucky to get 5 or 10%. Well, now Trump is at like 15 to 20%, pushing above 15%, 18% of the African American vote. So you're talking maybe a 10-point increase on his side and a 10-point decrease on the Democrat side. And it's because some of these pro-growth policies trickled down and people realized they were better off then than they are now after 4 years of what we're about to talk about, which has been the Harris platform type policies. And so Harris's playbook, social spending, okay, this is the Democrat mantra in the US has always been to help lift up the lower end income people with social spending, with government benefits. And so where does that social spending come from? A lot of times that's from printed money or tax money that might have already been available, but they're spending tax dollars to help out the lower income people within the country, which that's not a bad thing to help out people who need help, but it's not viewed so much as the pro-business approach. And so increase in social spending and an increase in regulation. The regulations come from a lot of the green agenda that, if you've heard about the Green New Deal in the US, I think Trump refers to it as the Green New Scam. But if you look at the details of that, it's a lot of high regulation on fossil fuel energy sector companies, restricting what they can do, making it more expensive to do business, restricting the growth, etc. And so this combination of social spending and regulation on what maybe they refer to as big business, maybe with the idea that the ultra rich need to pay their fair share so that they can have more social spending, and through regulation drive business in the direction that the green agenda would like it to go. Now, what is this green agenda? It's to restrict fossil fuels from being used, to push the energy industry towards solar, wind, and electric energy. And so electric cars, for example, in the US, there are big tax rebates and credits that you can get when you buy an electric car. That's not the case if you buy a gas-powered car, for example. And there's a lot of regulation and push that's making it hard for the car companies that make gas-powered cars to operate at the profit levels that they were able to in the past without these regulations and restrictions. And they're even being forced into producing electric cars that many of the people either can't afford because they're more expensive or don't want because the range of driving and the recharge stations aren't available in such high numbers. But these are the directions that the left, the Democrat agenda, is pushing largely on their platform. If you listen to them speak, if you listen to Kamala Harris speak, it's a lot about regulating big business, about pushing clean energy, and this is the direction then you would have to think if Kamala Harris wins, the energy sector outside of the green energy, the fossil fuel sector, those stocks might have bearish pressure on them. And if Trump wins, those energy sector stocks might have bullish pressure to rise up. And vice versa, if Trump wins, the green energy stocks and sector might be kind of bearish, and the fossil fuels would be bullish. And so if we scroll down and we take a look then at a breakdown maybe of who wins, what stocks might you look at. And so when it comes to taxes, it's broken down by section here. When it comes to taxes, Donald Trump pushed for more corporate tax cuts, reducing the burden on businesses. Kamala Harris likely to increase taxes on corporations. She's promised to do so, to make them pay their fair share, as the Democrats say, and increase taxes on high earners, so not just companies, but individuals who make a lot of money. And that could include inheritance taxes. They've even talked about taxing unrealized capital gains, meaning if you're holding an investment but haven't sold it, but the value went up, say on a house, they would like you to have to pay the taxes on the increase in value, even though you haven't sold the house yet. Many economists talk about the disaster that might be for something like the housing industry, where you might not have the cash on hand to pay the tax on the increase in value of your house. So you might be forced to sell the house in order to pay the tax on your unrealized gains. So these are some policies that are almost always leaning towards increased taxes on corporations and on high earners, okay, and even on potentially unrealized capital gains. And what do they use this money for? To fund social programs, okay, whether it's food programs, free credit cards, free cell phones. I mean, you can go on and down the list of the social programs that are there. Obviously, there are larger social programs, Social Security, that everyone pays into. It's part of what you get when you're older and you're going to retire. Obviously, those programs need funding. So, social programs are necessary, but then you also have an increased push towards more social programs and higher taxes when we talk about this category for the two sides. And so what sectors might be impacted by the tax differences? Large corporations, obviously, like Apple, Amazon, maybe they do better under a Trump-type policy in terms of their bottom line. And we can look at sectors like finance and energy. Okay, clearly we talked about the effect on the regulation side, and that's focused more on here in the next section. Donald Trump continued deregulation. By continued, they mean picking back up where it was 4 years ago. Certainly not continuing with what's gone on the last 4 years. And it would have a particular effect on energy, finance, and industry. Okay. Kamala Harris, the opposite. Stronger regulations on finance, technology, and climate-related industries. By climate-related, they mean fossil fuel-based industries. So what can we talk about? ExxonMobil is one that comes to mind. Okay. You can maybe anticipate that a Donald Trump win could create bullishness on ExxonMobil. Okay. In the bigger picture, doesn't mean like right after the results come in, it has to go a certain direction, but in general, the policies of the Trump side are in line with bullishness for the energy sector for fossil fuels. And if there's less regulation on banks, something like JP Morgan Chase, okay? And also the tech stocks, because they make so much money. Facebook, Google, if Kamala wins and wants to raise taxes on all the big corporations, it's going to hurt all of them that are in the upper echelon of profits per share and net worth, etc. So if we come down then, and by the way, if we're looking specifically at some of the social media tech stocks, okay, I'm not talking NVIDIA. Those I think would be happy with the lower taxes and unhappy with the higher taxes on corporations. But Facebook and Google, even with a Trump victory, you think about the criticism that Donald Trump and the Republicans have had about the Facebook and Google algorithms that many on the Republican side feel were biased against conservatives and blocked pro-conservative posts, allowing pro-Democrat posts. Some of that came out, actually, there's evidence of that, and the owner of Facebook testified in Congress and apologized for it. When Elon Musk took over Twitter, there were a lot of files that were found, and it was emails and communications with the current administration and their operatives planning out what stories to block, like the Hunter laptop story, what they weren't going to put through for people to see, and stories that they were going to allow. There was some collusion there that has been pointed out. And so that's why it gives an exception here with the tech stocks, that if it's Facebook, Google, they could see more scrutiny. And by scrutiny, we don't mean necessarily regulation in general, but scrutiny if they're mistreating one group compared to another in terms of the way they block or flag certain posts or posters, those placing the posts. So in particular, these two have been big time in the news, being looked at very closely by the Republican side. So Republican victory could put a scare into those couple of stocks. Just something to keep in mind. While the rest of the tech sector might celebrate lower corporate taxes, there could be some bearish pressure on these stocks based on that backdrop. Okay. As we go down, what about climate change? The Republican side, support for traditional energies like oil and gas. We talked about it. The Democrat side, a significant, and I can't say that word with enough emphasis, a significant focus on clean energy and environmental sustainability. It's not a bad thing to have clean energy, that's for sure. But the Democrat side does it at the expense of blocking, regulating, and stopping fossil fuel energy production as much as they possibly can, and forcing the hand into the green energy, whether it's ready for prime time or not. And so there was something like $6 billion spent in the US putting charging stations, and they managed to put 6. I think they spent about $1 billion per charging station they ended up putting up. Elon Musk was pointing that out because he in fact makes electric cars. And he talked about the inefficiency of how much money they wasted trying to modernize the system to be ready for electric cars. As long as I mentioned Elon Musk, he's actually running with Trump and has been invited to be part of the Trump team to help with certain aspects within his administration should Trump win. So certainly there wouldn't be an ignoring of electric cars and electric green energy technology under a Trump administration, but the focus wouldn't be as strong as under a Kamala Harris administration. So which stocks might you look at when we talk about climate change? And if one side wins compared to the other, well, it jumps right out at you again. If Trump wins, the energy side is Chevron, ExxonMobil, etc. The ones producing natural gas, oil, the fossil fuel side. If Kamala Harris wins, we're looking at green energy companies. Tesla probably could do well, even though Elon Musk is endorsing Donald Trump. Ironically, his company might do better if Kamala Harris wins because it's on the green energy side. So it's interesting to look at the dynamics of this, and other companies, Next Era Energy, and anything that we offer that is more related to the green energy side. And again, I say this with a caveat. It doesn't mean right after the election, if Kamala Harris wins, that Tesla jumps up immediately. I mean, it could, but the idea here is the policy is pro-growth for green energy companies if Kamala Harris wins. The policy is pro-growth for fossil fuel companies more so if Donald Trump wins. And so Maybe you're looking out over a longer period of time to realize that in some cases, but it's the general trend that we're talking about in terms of policy and what direction you might consider certain stocks could go, obviously with no guarantees, but maybe with the wind at your back with certain stocks, depending on who wins. Now, what about healthcare? Okay, when it comes to healthcare, the Republican side in general, and Donald Trump as well, limited reform, focus on private insurance, private healthcare providers and private insurance, meaning people pay for their own insurance, they can pick their own doctors, they can go to the best hospitals that they want to choose. The focus on the Democrat side has always been expansion of public healthcare, healthcare that you don't have to pay for, it's built into the tax structure, everyone can have it, it's the same for everybody, but the problem side of that is you don't get to pick necessarily what doctor you want or pick the best hospital to go to, etc. You're stuck within that public healthcare system and you have less choices and less options, and maybe not the highest level of care in some areas. And so these are the two sides. So then you start to pick, private health insurance providers, if Trump wins, may do better with less regulation as well, but also with a higher focus on trying to help private insurance do well and give people lots of options of what healthcare plan they want to choose and which doctors they want to go to. And so something like United Health and Anthem might do well under Trump. And on the other side, you might again look towards companies that lean towards scientific research into clean energy. Moderna, Pfizer were mentioned here. I can't tell you I know a lot about those companies in particular. They're obviously big companies and popular companies, but our team feels that Pfizer, Moderna, and any biotech clean energy companies would maybe be a bit more bullish if the Harris side won. Now, if we're taking a look at technology and innovation, what we can see on the Trump side, his platform, again, is pro-business policies, but with less focus on tech regulation. So pro-business, less regulation, okay? The Kamala Harris side, more regulation, but less support, unless it's for innovation in green energy and AI side. Okay, there is a strong focus on AI, but as it relates to green energy, if we're talking about a Kamala Harris victory, so we're looking at, I think I'd be careful with this Facebook example. Lighter regulation will help all companies, but I think this is misplaced. I would remove this. Facebook in particular, remember we mentioned up here, with a Trump victory, could actually see some negative bearish pressure because of the scrutiny on Facebook and Google for the biased algorithms that have been uncovered against conservatives versus how they rank and treat different viewpoints. And so in particular, I think this maybe is a little misplaced, but technology companies in general, there will be lighter regulations if we're talking other technology companies outside of Google and Facebook. And so green energy companies, again, would be the way to go in the technology side if there's a Harris victory. Trade policy, okay, I already talked a little bit about how Donald Trump used tariffs to help the economy and force factories to be built within the United States, hiring American workers, not telling companies they have to have the tariff, but telling them if you want to import from another country, you'll have the tariff. But if you want to come and build your factory in the US, you can avoid the tariff and have the lower corporate taxes that he's offering as well. So trade policy favoring tariffs. I don't know if I would say favoring trade wars. Could increase the likelihood of a trade war, but certainly in favor of tariffs and maybe more strain between countries when it comes to trade between countries. And certainly in particular with China. He was very tough on China. And so I would expect it would be similar. Large focus on China because so many products are imported to the United States from China, as with the rest of the world, I believe as well. But particularly China is a country that Trump would have his eye on again for potential tariffs, but also trying to not create a trade war, but maybe an influx of factories being built in the US to avoid tariffs. The Kamala Harris side likely to pursue diplomatic solutions rather than having tariffs, to do multilateral trade agreements. The problem with that in the past has been the U.S. has kind of come up on the downside of those multilateral trade agreements sometimes. Trump redid some of those agreements. One in particular was with Canada and Mexico that he did a new deal, and that seemed to work out pretty well. But he also undid other deals. And so that's where the idea of tension and potential trade wars could be a fear on the Trump side with these tariffs. So maybe more diplomatic solutions here, but maybe less beneficial than, because it's more of a compromise, less beneficial for the US economy. So less tension, but less US focused if Kamala Harris wins, maybe a little more global tension in terms of trade if Trump wins, but more US focused in terms of benefits. In particular, some stocks we mentioned, if Trump wins, that could be good because of trade policy, Boeing and Caterpillar. And on the Harris side, maybe the tech side, Intel and Apple, from having better trade relations. I mean, think of how many iPhones Apple sells to China. Imagine if there's a trade war and China puts tariffs on Apple. Okay, so this is where the Kamala Harris side of negotiating agreements could avoid strain on companies that export a lot to a country like China, like Apple. And that's why these are mentioned here. They're large exporters to foreign countries, and maybe Boeing and Caterpillar a lot less so. Okay, so a Trump victory, US companies that sell a lot in the US might be more bullish. But those that rely on trading with outside countries, there might be some fear on those if Trump wins. The opposite if Kamala Harris wins. Happiness from companies like Apple that sell to countries outside of the US, and maybe the US companies feeling like, we're not going to get as good of a deal under a Harris administration. Okay, so you've got ideas in both directions depending on who wins, where you might have policy that could be beneficial for certain companies. Now, infrastructure, again, it's the private sector focus with the Republicans. Focus on private sector led infrastructure projects. The Republicans are usually almost always leaning towards not taking tax money to get stuff done, to lower taxes and let the private sector do the work. And so for infrastructure, be leaning on the private sector projects more. And on a Kamala Harris victory, we're looking at increased government spending on infrastructure. Where do they get the money? Higher taxes on large corporations, on the larger earners, with a focus, again, on clean energy and modernization. So if there was infrastructure money being spent from higher tax dollars, what would it be spent on? Maybe more charging stations for electric cars, more windmills, etc. It certainly wouldn't be focused on the other side of things with those drilling for natural gas or fracking for natural gas or drilling for oil, etc. So again, green energy, companies that might be involved with infrastructure. And so on the Trump side, we're talking about Caterpillar and US Steel. Those are companies that right away might see a bullish type of wind at their back if Trump wins, because of the type of policy that he would have with infrastructure. And any economic growth with buildings and roads and all of that, these companies certainly make products that are largely involved in that type of thing. Under a Kamala win, we're talking about Next Era Energy, ChargePoint, First Solar. These are all companies that are on the green energy side of infrastructure. Okay, so I know it's somewhat repetitive in each category. Again, falling back to some of these same companies, but a good variety there as we go through the list. Now, this is just a summary then of what we just looked at. We don't need to go through that again necessarily. Market reactions, what to expect. Okay, it talks about here, in general, expect some volatility from now through the election. The effect on individual stocks, individual sectors of whether it's energy or industry, etc. These trends are looking, these ideas are talking about potentially maybe longer term type effects. And so you have to find your entry points and exit points from a technical perspective of when exactly is it maybe right to get in. If I think, I don't know, First Solar and ChargePoint and Next Era Energy are going to be bullish now, saying Kamala Harris won the election, but now you think, does that mean I should buy right now? What should I do? You have to then get into your technical analysis, the timing of the trade, when you get in, when you get out, or maybe you're selling on some of the others. Doesn't always have to be the buying situation. The ones that you'd expect to do weaker, ExxonMobil, for example, if Kamala Harris won, you'd be picking your high points maybe of where you might think about shorting it, if that's what you felt it made sense to do, okay? And obviously the opposite directions, maybe you'd be thinking in terms of upward movement or downward movement if Trump ends up winning the election. And then, like I said, as we're starting out, also pay attention to the House and the Senate races. You could have a stronger effect, and I would say it would almost certainly be a stronger effect if not only one certain candidate wins, but then they also win both the House and the Senate. So if you're certain of a direction somewhat in your mind, just based on whether Trump or Harris wins the presidential election, then maybe you're more certain in your mind if also they win the House or also win the Senate, etc. Okay, so you can magnify your certainty maybe in that regard as well. Now, I wanted to point out something here, and these are longer term type trends. And this is looking back into the 1920s even, from now all the way back, trends that have been seen. So some interesting statistics, and this is from T. Rowe Price website, and there are many out there that have statistics like this. More than half, 54% of the 12-month periods following the last 24 presidential elections in the US overlapped with a US recession. It's interesting. So more than half of the US elections, 54%, in the year following a presidential election, those 12 months overlapped at some point in time with, could be a minor recession. Okay, we're not talking a depression, but a recession within the US economy. Okay, and if we go down, this rate of recession occurrence was meaningfully higher than the averages for other years. So when it's not the year of the election, it's not the 12 months after the election, in the second year, only 29% of the time was there a recession. In the third year, only 17% of the time was there a recession. And in the last year, it ticked up some, but was still lower. 25% of the time, there was a recession in the election year. That's going back the last large number, 24 presidential elections. So if you already feel like the US economy is on the edge, there are a lot of people saying they're hurting from the high inflation. Credit use is maxed out in many regards with the US population. It's at one of its highest percent uses ever. Interest rates are high on houses. You can go on and on about the struggles that Americans are having with higher than comfortable gas prices. Rent is up 30, 40%, on and on and on, with the inflation problem that has occurred in the US. So if under all circumstances, with or without those problems that exist now in the US economically, 54% of the time, the following year after the election, there was a recession, it's something to keep in mind. Okay? There could be bearish pressure overall on the markets. It doesn't mean that if Trump wins, ExxonMobil stock won't go up. It still could, right? That's why we looked at specific stocks related to the policies of each candidate. So certain stocks might be more likely to buck that trend. Others that you think could be negatively affected by who wins, maybe that helps you feel more comfortable to short those if you also understand that the majority of the time after a US election, there's an overall recession the following 12 months. Okay? So what else can we look at? There are some other statistics that are interesting. Okay, the economy has mattered for presidential election results. There's a famous political operative in the US that was with Bill Clinton decades back. And the phrase he used when talking about the campaign strategy and how Bill Clinton really ended up winning, the famous phrase was, "It's the economy, stupid." And what he meant by that was, it's always about the economy. Who's going to win the election? Because it's about the money in people's pockets. How much do they have and how hard is their life right now financially? It's like the number one driving factor. And it's true again right now in the US election. It's one of the top mentioned things that voters say in the polls that's driving them to vote for one candidate or the other, the economy. Also crime, the border, there are some other things. But largely the economy, each election cycle has a huge role in playing who wins, okay? And so only once did the incumbent party win when the election took place in a recession, okay? The US technically is not having a recession, but boy, are people hurting and feeling like there's a recession because of all of the inflation. If you look at the polls, something like 75 or 80% in the polls in the US say that they're hurting financially, they're worse off than they were 4 years ago, that they feel like the country's going in the wrong direction economically, etc. It's a large, high percentage that feel that way. And so when they're recessionary situation, only once did the incumbent party win the election, when it took place in a recession. Okay, we're not in a recession in the US, so that doesn't apply here. And that happened in 1948 when the recession started in November. The recession started late, so the incumbent was able to win. Okay, another thing to consider, in more than 70% of election losses for the incumbent party, the economy has been in a recession that year or slipped into one during the following 12 months. Very important. So the US isn't in a recession yet, depending how you define it. Okay, the Republicans would say the recession started when GDP growth had 2 quarters in a row of negative growth. That happened a long time ago. So according to Republicans, there is a recession already. According to the Democrats, they're looking at other factors now and saying there isn't. Okay. So whether or not we've reached this first step of already having a recession is debatable, depending who you talk to. But if Donald Trump wins the election, that means the incumbent lost. And in that case, 70% of the time when the incumbent loses, there's a recession in the next 12 months. Okay? So then combine that data with this data up here, that 54% of the time in the 12-month period after all elections, there's a recession, 54% of the time in the 12 months after. Then you magnify it if Trump wins, it's not just the majority, 54% of the time after all elections, but if the incumbent loses, in this case Trump wins, then 70% of the time in the 12 months following that election, when the incumbent loses and the new candidate wins, there's a recession. And you can ask yourself, well, why would that be? Why would it come after the new person wins? And the answer to that is the reason the incumbent lost was because of all the financial stress in the economy. Remember the phrase, it's the economy, stupid. And because of all the stress that was already in the economy, that carried over into the first year of the new president. And so more often when the incumbent loses, well, it's usually because of the economy. So that means that the new administration inherited a bad economy. And so it looks like this could repeat itself again with folks struggling massively in the US, with the polls showing something like 80% saying they're worse off now than they were in the past, with credit maxed out, high interest rates, etc. It looks like the economy is maybe set up for a recession in the next 12 months. We'll see. There's no guarantee of it, but this percentage seems like it makes sense if Donald Trump wins, because it's solidifying the fact people just are not happy about the economy, and they're even willing to vote for someone that maybe they don't even like, because the personality maybe turned a lot of voters off with Donald Trump. But again, it's the economy, stupid. That's the phrase they go back to in politics in the US. So very interesting numbers, very strong percentages here. If the incumbent loses, that you could assume that there must be some kind of economic stress that could lead to a recession the majority of the time over the next 12 months. But then you see that that recovers in the second year and the third year of the administration, where it's less and less likely that there'd be a recession as the new administration has time to enact the new policies. It drops from 54% of the time to 29% of the time to, by the third year, only 17% of the time there's a recession 3 years after the new president replaces the incumbent. Okay, so it looks like there are changes made when the economy's bad, that the new person that replaces the incumbent improves things the majority of the time, looking at these statistics, by the third year. Okay, so interesting data, interesting statistics to talk about with the presidential election. Any questions, comments? I'll pause for just a minute. That's pretty much the end of the political presentation, and we've used almost the full hour. So I'll look for questions as I'm quickly bringing up what I wanted to show you on the economic calendar. And we'll skip over today and we'll jump right into tomorrow on the economic calendar. Tomorrow being the 1st. If I can get to November. There we are. November 1st, we scroll down to the US, and these are the big ones, okay? Non-farm payroll here coming in, high level announcement. Look at the expectation of the jobs numbers in the US to drop. Jobs production expected to drop. 254,000 to 113,000 new jobs created. Unemployment rate expected to stay up above 4%. Average hourly earnings expected to drop, not go up, drop. So people are hurting already. Hourly earnings expected to drop. New job creation expected to drop. So as you look at this, if these numbers come in as expected, then you start to think about the impact of the US election could be stronger. More of a push because of economic stress towards the Republican side. If these numbers come in better than expected, maybe that helps make a case for the Kamala Harris side. Okay, it's the last large numbers coming in before the election that they can all either brag about or try and scare people about. So it's something to keep in mind as well. I believe there will be large movements tomorrow based on this because there's a huge focus before the election on this data as well. This more of a short-term effect. The policy stuff we talked about, more of a longer-term effect. Okay. All right, everybody. Thank you for joining. I'm going to have to cut it off here because we have another webinar starting in about 2 minutes time. So thank you all for joining. I hope it was informative for you. I didn't see any questions pop up, so I'll assume I was pretty clear. And until next time, good luck with your trading. Bye for now.